Regulators are looking for more control over the expanded crypto universe. That means universe of assets, so a collection of assets. So by a
I,
universe of
I
any
saw where you're
asset,
going
just
with that, Jay.
I wanted a
yeah, that's not
universe
We will
for
be
crypto.
we will be talking about the crypto universe, metaverses, in a couple
You
minutes.
know,
Definitely hold on to your
but I
socks.
mean, if we're talking portfolio theory, then we all know what a universe is.
right. A universe of assets. So we're discussing. So the regulators are just looking more into how they want to and what they can do to regulate the crypto markets because there is no single regulator to inspect crypto exchanges and brokers, unlike securities and derivatives markets. Really, the only time any regulators step into these markets is when something happens or the regulatory action needs to be taken because of a faulty transaction or some kind of fraudulent behavior specifically that violates a U.S. law that already exists. And some of the fears that there is, obviously, and it kind of goes hand in hand with what people want cryptocurrencies to be, but at the same time, it shows the other side that there could be a shadow financial system developing, right? Which is something that exists behind the scenes outside of the view of regulators, which does produce some problems in an economy when you can't regulate certain assets and you can't provide protections and liabilities and you can't manage those markets very well. Uh, Regulated exchanges have to have laws that, for the most part, right, promote fairness and prevent fraud. And even though, yes, we do have problems with our current systems now, if they didn't exist, I don't know how to describe it, but it would be like retail investors would just be robbed of everything that they owned. So that's the show. Like, yeah, none of the systems are perfect, but crypto markets have none of those things, right? None of the brokerage exchanges follow pretty much any rules. There's no guarantee that the order books you're looking at are correct. There's no guarantee that the trades that are being made are even real at any time. So similar to how we use dark pools, right? But the thing about dark pools, have their own form of regulation lightly, and they have some tethering to the market, whereas crypto markets don't have any of these things, and are just basically there's no consumer protections, there's no fraud protections, there's no really way to monitor that.
But there is a way that the individual consumer who owns their Bitcoin and who is knowledgeable to get a cold wallet, they are able to verify their own cryptocurrency, the ownership of it, and where it is on the blockchain. And
Right, but we're talking about when trading in the exchange
yeah,
as an
yeah, yeah.
asset.
I
So like
just
we're not
want to
talking about, they're not
clarify
talking about
that
the
part.
right. They're not talking about the blockchain here. They're talking about crypto as an asset. That's
Gotcha.
what's important. Like they're not regulating blockchain. No one can really regulate blockchain's technological advancements. We're talking about the asset because the only thing the FTC, the SEC, and the markets are concerned with is the actual asset class and the markets that exist for them. And as of Q4 in 2020, consumers reported losing over $82 million in crypto scams, which is 10 times greater than the same 6-month period last year. So I just found that interesting, even though most of those are on social media and people, doing things they shouldn't be doing. So clicking on links and staking Bitcoin in place that they shouldn't, or moving them to exchanges that aren't real, things like that. So, and the House Financial Services Committee recently they formed a committee of 12 Democratic lawmakers to consider potential legislative changes aimed at digital assets. And why is that important? That's important because it doesn't matter where you stand. If a bunch of lawmakers decide to come down regulatorily, there's very little the average consumer can do. So we have to pay attention to that to see how that affects the markets themselves and the assets that you hold, right? And being 12 Democratic lawmakers is, they're very much against big tech. They're very much against losing any form of control and anything that is really foreign to them. So that's definitely a sign that regulatory actions could exist. So, and then the thing is that back in 2014, Janet Yellen, then the chairwoman of the Fed, had said that the Federal Reserve had no right to regulate cryptos, and they were correct. And it was just a regular asset, and that was back when the market was about $4 billion. It's now about almost $650 billion, and you have a lot more bigger players in here. So at the time, it was a very small market, so it really didn't seem like it needed any heavy regulation. But as the asset market itself gets bigger and bigger, there are more and more calls for more stringent regulation, or at least the ability to regulate it. And the difficulty here is really just how it works, right? Crypto is used not only as an asset, but it's used to buy things, sell things. It's big companies, small companies, individuals. So it's very difficult to figure out what regulatory agency would specifically govern the crypto assets. So that's kind of really been an internal debate that they've been having. And currently, the best way that people are proposing is that you have to bring in the engineers, the developers, which I completely agree with. You need to bring in these individuals to find ways to write the laws such that they pertain to the crypto market specifically and to those assets, so that you're dealing with them based not on precedent of previous law, but on the reality of how they're developed and how they're used now. So we may see new regulatory body that is designed specifically for this purpose, as opposed to necessarily trying to file them into one or a series of other regulatory bodies that already exist. So
I think it's going to be coming sooner than later, because once Robinhood IPOs, they are one that gives out these assets as a brokerage. They are a brokerage. So if they are giving out these assets, then they're going to have it under a specific regulatory rule, or else Robinhood could be like, oh, well, we got hacked, like these other hedge funds that these two brothers in, I don't know, South Africa, they had
they ran
millions of dollars, and they just say they got hacked, they dipped out, and they who knows where
they stole all that money. But then that's one of the problems. The SEC currently hasn't made clear any laws or rules about how brokerages can safely hold crypto assets that are deemed to be securities. So there is no really method of custody that's been defined. There isn't even really regulations on how this stuff is held. There literally are no regulations here. It was created without regulation. The markets really exist outside of regulation. And beyond being able to tax it, from the IRS being able to tax it, there really isn't too much going on there in terms of regulation, which as an asset class makes it very risky and very dangerous, because it kind of exists outside the ability to protect consumers, to protect market participants, to protect the broader market as a whole. So I think that what we may see is more regulatory action that does come down within the next, I would say, maybe year or so. We should expect, I think, bigger news based on this. And I think that I wouldn't be surprised if they were creating a special regulatory body that is designed specifically for crypto and other digital assets that are used in similar ways. So they literally say, all right, we're going to make a new regulatory body, because all the old regulatory bodies, they have strict frameworks. And crypto doesn't really fall into those strict frameworks because it kind of goes across multiple of them, and it's not really, they don't follow the same rules and patterns. So I would expect in the next year or two at least some announcements about a new regulatory body being formed specifically for this purpose. I can see that.
Interesting. Well, definitely more things that everybody sees this as like a potential for Bitcoin to drop, but the more rules that come about in regulations, this is what's gonna create hopefully a stability in the coin and less volatility in the long run. And I think that's always the goal when it comes to regulations. It's so that nobody's able to truly manipulate it on their own.
I mean, that's the thing. If retail ends up saying, hey, we don't even want to be in Bitcoin anymore because there's more regulations, well, guess who loves regulations? Large institutions, large investment firms, because the more stable it is, the more they'll buy up. So it's just going to become more mainstream. And that's all it is. It's the continuation of making sure Bitcoin stays alive. And with more regulations becomes more derivatives and complex orders to fill and everything. Yeah, complex products. And I don't see it going away anytime soon. Though it might drop, I think it will stabilize somewhere. But as of right now, crypto is still over my head when it comes to prediction wise.
Yeah, I don't think the cryptos as assets will ever disappear. I mean, they exist, people pay for them, markets exist, and they have a price. So they're real, they do exist, there is a market for them, and I consider them crypto assets. I just don't consider them cryptocurrency. But I agree, the regulations are not to destroy crypto, it is to try to find a way to make that market safer and protect consumers and kind of help find a series of conformity that allows this asset to be governed in a similar way to all the other assets. Because if you're going to have this big asset class in your market, but you have no way of regulating it, it makes it kind of hard to fit into the bigger picture and figure out policy when you have such a big asset class that you don't know how to govern, that bigger players might get involved in, and how do you deal with things that occur with those bigger players down the line when these happen, when there's huge price fluctuations. But if something happens, how do you deal with it? How do you protect it? How do you regulate that?
Exactly.
So, yeah.
Yeah. Well, more to see that definitely in the future, and as more and more countries continue to try to adopt it, and I was reading that the U.S. might be the country that's closest to adopting and using it, and so I'm sure our banks and large institutions are going to be talking heavily about this.
Well, they already have digital coins in France. and
Tezos.
China's developing their own. Well, they're using the Tezos blockchain, but they made their own central bank digital. So, like, they're not using the Tezos coin. They're using the Tezos blockchain to create their own central bank digital currency, the CBDC. That's what the United States is currently talking about. China is also building their digital yuan, as well as El Salvador. El Salvador wants to mine crypto, so I don't know how that's.
Yeah, I saw their potential for yearly mining could be like over 500 million, which is like very impressive.
Right, that's why I say I think that we'll see the end of like coins like Bitcoin being mined in a lifetime, because when entire countries fund their operations, then you speed up the rate of production, right?
It makes perfect sense.